And Europe stocks attempted to rally in early trade on Friday after their worst sell-off in history as the rapid spread of the coronavirus pandemic continues to dominate investor sentiment. Well, let's bring in my colleague there in Frankfurt, Chelsea Dulani, to make some sense out of what's happening in Europe. Hello, Chelsea. Good afternoon. Well, European markets bounced back today after their worst day ever on Thursday. Will this rebound last?
Well, this rebound is really gaining steam here into the afternoon in Frankfurt. The DAX, which is behind me, is up over 8% right now. There had been a lot of concern over the past several days that governments and central banks just didn't have the tools and the willpower to really counter the effects of the spread of coronavirus on the economy. That's one of the reasons why we've seen just these massive sell-offs over the past several days. But governments and central banks are really coming out and trying to dispel those fears. We've seen just a number of central banks from Japan to the US to China injecting trillions of dollars into the market to try and stabilize trading over the past several hours. And we're also seeing a lot of governments coming out and saying that they're going to basically do anything they can to keep businesses and consumers solvent. And even in France, for example, they just said they're going to compensate anybody who loses money because of coronavirus on their jobs. And we're just seeing a lot of different efforts. And for now, that does seem to be convincing investors. But this is obviously a very volatile and unpredictable situation. So I think everyone is still a little hesitant on calling an end to the downturns we've seen.
In the meantime, the German government is expected to announce plans for a stimulus package to combat the slowdown. How big could these measures be?
We've already gotten some of the details in the past few hours, and it's looking like a really enormous stimulus. They have announced that they are going to provide lines of credit to any businesses at any level, so just unlimited credit to businesses. This is estimated to be worth about 500 billion euros. They're also increasing funding for companies that have to put workers on part-time work. They're talking about tax credits. So it's going to be in the hundreds of billion dollars, the response to this outbreak. And I think that's another reason why we're seeing such a massive reaction in the DAX right now. People are really latching on to hope that governments will basically guarantee the health of businesses as they combat the crisis.
Dumping Italian government bonds after yesterday's European Central Bank meeting disappointed investors. Could Italy be facing a debt crisis?
There's a lot of fear about that. Italian bonds had their worst day ever yesterday, worse than the financial crisis, worse than the European debt crisis. It was really just a bloodbath for European bonds. This comes as Italy has been the hardest hit country in Europe by coronavirus, and they have to really unleash a lot of stimulus. They need to be spending money and helping shore up confidence and helping businesses and helping consumers that are hurt by this outbreak and the lockdown of the entire country. But they also have a lot of debt already under EU rules. They're not allowed to borrow anymore because their debt to GDP ratio is already above 130%. So they're getting more. They are getting more flexibility from the EU, but the ECB meeting yesterday just really sparked concerns that their bonds and that their government finances are going to sort of spiral out of control. I think the ECB today is trying to walk back some of those concerns and say we're going to do whatever it takes to support Italy right now, including buying their bonds ourselves. But whether that's a long-term solution is really it's going to take some time to see.
Well, Chelsea, I will say what a week that I can say. Thank God it's Friday. Enjoy the rest of the weekend.